The fourth thing that you want to understand is diversification, but understanding diversification the right way. So when Warren Buffett talks about diversification, what he says is that diversification is for people that don't know what they're doing. Then other times you hear people say diversify, diversify, diversify because you don't want all of your eggs in one basket. And this is where you got to understand your goals, and your perspective on what this means. Because if you don't trust yourself as an investor, then you want to diversify. Because then if you do something wrong, you have a backup plan. But if you trust yourself and you want to see the big potential returns and you want to go all in, then you don't diversify, but you got to understand you're taking all the risk. And what you're doing is going to depend on you. Elon Musk doesn't really diversify. I mean, I know he has a portfolio of companies now, but he goes all in on his companies. When Sam Walton was building Walmart, he talks about in his book, great book by the way, Made in America, that he hated this idea of diversification. He put all of his investments back into Walmart. He wasn't going out and diversifying his investments into other places. He diversified his money in his own company only, versus you have other people that will diversify their money into many different types of ETFs and other different things as well. So the first thing I want you to understand is, when should you diversify? You diversify if you want to diversify against your own risks. I diversify my money because I understand that I can make mistakes, and so I want to diversify away from me. When I started off, I invested all of my money into real estate. And then I realized that's not where I wanted to keep all of my money because, well, what if I do something wrong? So then I started diversifying my money by investing my money also into stocks. I diversified my money by also investing into some physical gold. I diversified my money by also investing into startups. I diversified my money by also investing in some cryptocurrencies. Then I realized that I needed to have a different type of investment portfolio that fit for me. And you got to understand now, if you are going to diversify, you got to understand, number one, what does diversification actually mean? Because most people are doing it wrong. And number two, how do you actually go about doing it? So when it comes to diversification, now, if you do decide that diversification is right for you, now the question is, what does diversification actually mean? Because when most people think about diversifying, they think it means I'm diversifying by investing my money into blue chip stocks, emerging market stocks, and real estate stocks. But you're still only investing in one asset class. You're only investing in the stock market, which is a paper asset, which means if the markets go down, you lose because now all investments go down. Real diversification means investing your money in different asset classes. And this is where you got to decide now, if you're going to be investing in different asset classes, what does diversification mean for you? So for me, and I don't recommend what I do to anybody else because I'm just a random guy on YouTube, I invest my money in 5 places. Number 1 is my own company, business, Briefs Media. Number 2 is investment money into physical real estate. Number 3 is investment money into stocks. Number 4 is investment money into speculative investments. These are things like startups and cryptocurrency. And number 5 is I own some physical gold. This is a super rough sketch of what it looks like, but when it comes to my business, you might have heard me talk about Market Briefs. Market Briefs is a free financial newsletter that we publish in Briefs Media. It breaks down what's happening in things like the economy, the housing market, stocks, crypto, and the global economy into a fun, witty, and easy to read newsletter. If you have not read Market Briefs yet, I got the link to how you can join down in the description below. But when I invest my money into things outside of my business, my largest investment is real estate. I like real estate because I own a hard asset and it provides cash flow. Number 2 is stocks. Now, when I invest in stocks, it's a little bit different because I have 2 strategies when it comes to investing in stocks. I have a passive strategy and an active strategy. My passive strategy is a set it and forget it strategy where every Wednesday money is pulled out of my checking account and it's automatically invested into my portfolio of funds. These are funds that give me exposure to dividends, some for value, some for innovation, some for emerging markets. So every Wednesday money is pulled out of my checking account and it's automatically invested no matter what's happening, whether the markets are up or down, if it's raining or if it's snowing. This happens no matter what. Then I have an active strategy where I'm also looking to invest in individual companies. And this is where I'm looking for a good opportunity. If the markets crash and I see a great opportunity, I will come in and buy. If I see a company getting slammed or I believe it's really undervalued, that I think is a good company, it's worth a lot more, then I will come in and buy. But I'm only buying when I see a good opportunity. So those are the 2 strategies that I have when it comes to investing in stocks. When it comes to investing in my speculative investments, this is about 18% of my portfolio. And this is where I'm investing in things like startups and cryptocurrencies. These are what I consider more speculative, where I know that these investments can go right down to zero. But I also believe that they have a lot of upside, which is why I'm investing in them. And so for me, my bulk of my investments are here, but I also understand that, this is kind of like the fun side of things, that if it goes up, great. If it goes down to zero, I'm still okay. And the 2% of my portfolio here is physical gold. I don't consider it a real investment per se. I consider it like owning hard money. It's an alternative to holding cash because my theory is if I bury $10,000 worth of physical gold in my backyard today, and I also bury $10,000 worth of cash My thinking is that in 10 years, the physical gold will have more buying power than the cash because of things like inflation. So 2% is gold for that as a diversification, as a hedge, and just as a type of insurance. So if you're going to be diversifying your money, number one, understand, do you want to diversify? If yes, what does real diversification look like for you? Number 5, do not trade the news. The stock market is very emotional, and especially for somebody who's getting off investing their money themselves in the stock market, it's very easy to get caught up on what's happening in the day-to-day because the stock market can go up and down in the blink of an eye because there are millions of transactions happening every single second. And so now when you have all these transactions happening in the stock market, well, you want to make sure that you're not the person that's just making everybody else rich. And what that means is you don't get caught up in the emotions because a lot of things can move the stock market in the short term. For example, you can see tweets by celebrities that then cause stocks to fall or rise based off of what they say in a tweet. But you don't want to be the person now that's just chasing and going behind these emotions, because over the long term, the stock market follows fundamentals and financials. Over the short term, it follows emotions. And as an investor, you want to be investing your money for the long term. You're not a trader who's trading their money for the short term. Traders can make a lot of money in the short term, but in the long term, traders end up losing to the long-term fundamental investors. So if you want to make real wealth, the way that you do that is by investing your money, not trading your money. And that means you got to get away from the emotion, understand the news, but really pay attention to the financial trends rather than just the emotions, because those trends are going to show you where money is moving through the economy, what industries are benefiting. And this is one of the things that we try to do in Briefs Media, because we have a newsletter called Market Briefs Pro where we help cover the financial trends. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.